Welcome back! We are here for the chart of the week. 3 keys to the HimaReddy Trifecta case study, Apple into earnings. Today's Wednesday, January 27th, 2021. Now, important reminder before we look at the charts that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. So the 3 keys to the HimaReddy Trifecta. Key number 1 is price. Right? Price is fact on your chart. It's not like earnings. It's not going to be adjusted or revised. Price is fact, so you've really got to know what it's doing. Key number 2 is momentum. That's the forces driving price. And I use my Jedi twist on a key momentum indicator to help me make the most of momentum. Key number 3 is timing. If you're ignoring the bottom axis on your chart, the time axis, you're trading half blind. So we need to make sure that you know how to incorporate all 3 to make the most of my trifecta. So as I said, we've got a case study on Apple. It's releasing earnings report this week. And so let's go take a look at the charts. All right, so here's the daily chart of Apple. So on the matter of price, we are on a daily chart, as you can see here. And these are candlesticks, Japanese candlesticks. So every candle represents 1 day of price action. In terms of momentum, we've got the Jedi twist that I use called the RSI power zones. And that has these 4 zones that are really important to watch for how the forces behind price are moving. For timing, I use my simplest forecasting tools, included in the loss forecasting trading system. And right now you can see some of my resulting analysis marked by these vertical lines. So back late in 2020, I predicted a key timing point likely turn in the market for October 29th. And you can see the market made a low within a couple days of that. So it was tradable, usable information. And just this quarter, just this month, I made a prediction, a forecast for price to turn on January 19th. And it hit it to the T. That's where we had liftoff from this trading range. All right, so now we've got the lay of the land. What do we do with price, momentum, and timing going forward? Well, the first thing looking at price here is that we are in an uptrend. Series of higher highs and higher lows. And you've got to know which are the most significant highs and lows from which to calculate your cycles and find your clusters of price resistance and support. So I've done that in my Skinny Markets Outlook. These are quarterly reports that I put out to my tribe, and the latest edition went out just in the past week. That's why I was able to have a key timing point that ended up being really close. All right, so price is in an uptrend. Now what's next? Well, in terms of price, there's a resistance here at 145.52, calculated out in outer space, if you will, because there's no previous traded price action at that price since the last split of Apple shares. But this is a level, among many others, that is in my Skinny Markets Outlook report. And you can see, I put this out there during Martin Luther King weekend, okay? And look at how the market traded really close up to my level, just 50 cents away approximately, and has been hanging out since. So you too can project support and resistance if you have the right tools. All right, that's what I see right now in price that's important in terms of the trend, in terms of projected resistance, and then let's look at the bars. The bars here are showing that we had a run up in price and now we're consolidating. So the market is waiting. And again, earnings are being released this week, so it's not surprising. All right, now let's move into timing. So take your eye down to the bottom of the screen here. This squiggly line is my RSI Power Zones indicator. What's interesting is that right now there is a disconnect between price and momentum. Those of you who have the bull bear RSI face-off or the 4 zones RSI coverage system, you know exactly what I'm talking about. And that disconnect is hinting that maybe prices are not going to continue higher from here. So from a momentum point of view, this 145.52 might hold for a little while, okay? Not forever, but maybe for a little while, and there may be more sideways trading or consolidation within the January 25th range before any potential breakout higher. All right, now let's look at the key timing. So as I mentioned, the Skinny Markets Outlook happened to have a key timing point that has already come to play. So those of you who got your Skinny Markets Outlook, as soon as I released it, awesome job. I hope you were able to capitalize on this timing call. Now, when you learn my lost forecasting trading methods, you can identify the cycle that you want to measure and project out new targets depending on your trading time frame. That's the beauty of it. And I've now got a key timing point out in February that I'm going to dive into for my loss forecasting members. You'll see it as a quick case study. So remember, price, momentum, and timing. Right now, Apple's in a holding pattern. The next resistance is 145.52. There is a longer term forecast suggesting it will rise into mid-February. But it all depends on what unfolds short term along the way. So you've got to be on top of the price, momentum, and timing. And again, if you want to learn more about my simplest forecasting approach and see my latest up-to-date forecast on Apple, check out the Loss Forecasting Trading System. Catch you next time. You can sign up at the link to get my hot, timely, actionable updates as soon as I publish right to your inbox.